Las Vegas Traders Expo with Brian Shannon, CMT. Brian is the president of alphatrends.net. Brian, good to sit down with you, my friend. Good to see you.
Finally, yeah, good to get on your show.
Absolutely. So you came in from Denver for the event here. I know you spoke earlier, you're speaking a little bit later today. Can you tell us just a little bit about the presentations you're doing here?
Yeah, so volume weighted average price is really the topic of both of them. First one this morning I did for the CME, and because it's the E-minis and that's a kind of a scalping vehicle the way I see it. Most people don't buy them and hold them. Right. So I was kind of pointing out the differences of volume weighted average price for short-term trading on the E-mini versus the SPY, which is kind of crazy on days where it gaps. You're not getting the full picture. If you're a SPY trader, you have to look at the overnight stuff just some short-term scalping type strategies for that one.
Good. And then this afternoon is a different presentation.
This afternoon they're going to live stream that too, and that is about just more educational about the volume weighted average price and how to use it on a larger time frame. So volume weighted average price, like most technical indicators, there's that fractal aspect to the market that you can use them and find value on any time frame if you know what you're looking at. So it's more, it's longer term time frame. So in my main style of trading, which is swing trading, that's kind of the focus of this afternoon.
So I want to get back to Anchored VWAP. I want to talk about your book, Multiple Timeframes. But first, just to give people a little bit of an introduction to you, can you tell people how you got to this point? What's your background? How did you get to this point where you're running alphatrends.net?
Yeah, I'll make it quick. I started in Boston as a retail broker. At first, it was Thomas James. I did about 3 months with them. They were a little, they're gone. I can call them. They were a schlock brokerage, but it got my foot in the door, and I went over to Lehman right after that. After that 3 months, got in there. Lehman taught me how to sell. I realized I didn't want to be a salesman. I didn't want to be a telemarketer. So because my interest has always been the market and trading. So moved to Denver, worked as a broker there for a couple of years, and then started a trading firm, short-term trading firm. It was for a firm based out of Dallas. It was called Cornerstone, and they were just kind of as SOZ was kind of ending, but you still had trading shops where people came in. I did that, then went over to MarketWise, which was focused on education. I ran their educational department and then ran their proprietary trading department, which was an interesting, totally different, interesting story. It was kind of thrown at me, and I think I was 30 years old, and the head of the company, Dave DeNasser, said, "Hey Brian, so what do you think?" I said, "Well, Dave, we got 30 guys here. I could do my job a lot better if we had 15 of them." He goes, "Okay, well, why don't you do that today?" And we were on the phone. He's like, "Are you kidding me? I've never fired anyone in my life." And so he goes, "Just get them all in a room, get a witness," and so it was a mass execution.
Awesome.
I felt like. What's that guy? They called him the Hatchet Man, Al something from Sunbeam. Remember him, the Hatchet guy?
Yeah.
I felt like, because that's around that time. Anyway, so I then, kind of stayed with them for a while. I had a great number of years teaching, educating, trading their funds as well. And that kind of ran its course basically.
Got it.
And started Alpha Trends after that, just as kind of a journal for me to keep track of my trades. And I'd always written a newsletter called The Wise Guide at MarketWise. And I got in that daily habit. It kind of kept me honest to my process. And so, it just kind of blossomed out of there. I mean, I was doing YouTube videos 13 years, as YouTube became YouTube.
I was going to say, that's early YouTube time.
I was uploading to Google at first. And then Google bought YouTube, and then they transferred them over to, anyway, so, it just kind of evolved out of there. Got involved with StockTwits, and StockTwits, Howard said, "Hey, we'll do a subscription product for you. You don't have to do anything." I was like, great, because that's what's been holding me back. I've been trading and doing this for free. Why not monetize it and, spread the education and get another diversified stream of income?
Fascinating background. You've touched on a number of different things. Can you talk in particular about your use of technical analysis, how you were sort of introduced to the toolkit, how you learned? I know you have your CMT, which I do as well. Where did that fit into it? How did you kind of grow as a technical analyst, technical trader?
I think I was in late high school. Okay. I had read, and you probably know this company, the Cabot Market Letter.
Oh, sure,
they're still around, actually.
Yeah, that's right.
So back in the day, this was probably 1990, they were writing about Summit Technology, Beam, their radio keratotomy. And so I used to go to the Andover Library and look at that every week or every month whenever it came out.
Yeah.
And then they had this one company called Advanced Polymer, APOS. And they said, we like the stock above $5 a share. And it was like 430 or something like that. Throw out a 420 reference. You're from Seattle, so you know.
Of course.
So they said buy above 5, and I'm like, why would you buy it above? And they showed a chart, and it made sense. It just really kind of made sense. So then, fast forward a few years when I went to Thomas James, there was another brokerage on our floor, and they used to get the Investors Business Daily, the daily graphs, the blue and the green books.
Sure, yep. The old print books.
Yeah. Yep. And so I borrowed a couple copies of those because they would be in the lobby, and I'm like, oh, that's like gold. I didn't know where to get them. And I had no money, so so I borrowed a few copies of those, and then the guy I worked at Lehman used those quite extensively, and that kind of really began, and then I read Stan Weinstein's book, and I read it in probably, I read it on a flight to Alaska once, and I was just hooked. Then I just started devouring everything like everyone does, and then, what you can do today in terms of the learning of technical analysis is just amazing how many different opportunities to learn there are versus what, just the books is all we really have, right?
Of course. And then when did you do the CMT program? How did that fit into your growth as a technical analyst? How did that sort of fit into the story?
CMT, I think I did that probably 6 years ago, if that makes sense. I had been aware of it. When I first moved to Denver, 93-4, I attended a CMT meeting, or MTA back then, right?
Yeah, that's right.
And I was going to do it, but the brokerage firm I was working at wouldn't pay, so I was like, man, I don't need that, whatever. So anyways, I picked it back up, and I lost my train of thought there.
Yeah, just the CMT, when you got started in, and how that sort of fit into your growth as a technical analyst.
Right, so this was, so I wrote my book in 2008. And
this is the multiple time frame.
Correct, technical analysis using multiple time frames. I saw the CMT and I said, I wrote a book and I get a lot of good feedback on it. Why don't I just write them a letter and see if I can get an honorary CMT? I was like, I don't want to take all these tests.
You said you don't want to be in sales. Like, come on, that's a great angle.
Well, I learned some stuff at Lehman, too.
I have a great deal for you.
Okay. And they very politely collide.
No,
I was like, honorary degree, come on. So I did the tests. And so each of the level 3, 3 levels, and I learned a lot of different areas I wouldn't have explored. Some I didn't want to and won't use, but that's okay. It made me more well-rounded, and I understand the CMT program. So I had a little bit of a closed mind towards it, I guess you would say. But once I went through the process, it opened my eyes to what a lot of other people are doing. It really helps distinguish a lot of hacks on Twitter. I mean, you see some stuff that they call a flag. A flag, the most basic common pattern, you can misidentify it over and over again.
That's right.
So to me, it gives that extra credibility that 3 letters behind a name do. So it's been, I'll tell you, one of the best things about it is meeting people like you. I met you 4 years ago at the CMT event, and just meeting some quality people there and really network opportunities.
That's great. You mentioned social media. I know you've been very active with StockTwits and in social media, and you mentioned the low barrier to entry. But and as a result, I think it's tougher to distinguish at times. Who are the people that really know what they're doing on there? How do you think social media has changed technical analysis, or changed how you think about the markets? How does social media fit into your process of going through your day to day?
I think that, it's become so much more widely accepted, technical analysis in general, because it's so easy. I mean, it lends itself to social media. It's visual, it can be short-term, it can be instant gratification that everyone wants. But there are, the downfalls of, you think of a newer guy coming into the market and just starting to follow people because they're popular, but they might just be really good salesmen who really don't know what they're talking about. So from that aspect, it's a little bit more difficult to wade through what the quality content is.
Yeah.
And I think that, you know, CME it doesn't mean you know more than everybody else, but it means you went through a process to understand each step and understand it and pass a, you know, curriculum that's very well laid out. So I think CMT is like a great place for people to start if they have that. It's just it's a great, you know, everything else is a disqualifier, and start from there.
That's great. You mentioned your book, Technical Analysis in Multiple Timeframes.
Yep.
It's a fantastic read.
Thank you.
I love it because I would always, when I was dealing with you know, junior technical analysts, people just getting started, they'd become so focused on this one chart and not think enough, not having awareness of how this chart fits into all the other charts, specifically just thinking about different time frames. You're starting with the weekly chart, how does that relate to the daily, how does that relate to the monthly, and all of that. Can you just give a quick take on, you know, what inspired you to write that book, and sort of what should people know about the work that you're presenting there?
Yeah, so, you know, I had the experience of seeing David Nasser write a best-selling book, New York Times bestseller book, and I actually thought, you know, arrogantly, of course, that, hey, I could write a better book than that. And, you know, but the point was I didn't write a book, right? And the first step is to do it. Then you can start saying whether you can do a better job.
That's right.
My motivation was I have some things that I thought were somewhat unique that weren't being talked about, spoken about, and that I wanted to put my version out there. I remember my dad saying, Brian, there's so many books on technical analysis. So yeah, but none of them are in my voice. This is my voice and my interpretation. So I wrote that book. My sons were 6 and 8 at the time as well, and I thought, you know, if they want to get into the markets, I want to write it so they can understand it. So I wrote it from a perspective of, you know, not bogged down in a bunch of technical jargon, but instead to make it easy to read and in the spoken voice, basically.
Yeah, it strikes me as super accessible.
That's what I've heard, and which I'm proud of, because that's the way I wanted it done.
That's great.
So that was kind of my motivation, and it's received a ton of great feedback over the years, and I'm you know, it's something I'm proud of. So.
And how do you help people understand this idea of multiple timeframes? Is there any general takeaway or a process that you should use to make sure that you understand the relationships of the different time
So I think that no matter what your time frame is, you should always start with a bigger time frame than what you're actually involved in. A lot of people say they want to be Warren Buffett and hold for 20 years, but no one does it, right? And you know, now you've got, so, you know, the 20-year time frame, you could go back looking 100 years at a chart, but, you know, how's that going to really help me today? Is supply and demand from, you know, support and resistance from 80 years ago anything other than just a level that we all look at? Or even 5 years ago anymore? I mean, is there much price memory actually there that people are waiting to break even on Cisco systems still? Are they, you know, or you know, all these stocks. Start with the bigger picture to identify just what is the major trend. Then drill down to an intermediate term time frame and say, here's where I can kind of establish my risk reward. Here's where I think that, you know, if it goes below this level, my thesis is no longer valid, but I see the potential for X upside if we're, you know, looking long. And then a shorter term time frame just to kind of drill down and get as best timing as you can without getting too microscopic, you know, putting your face up against the glass. But it, you know, time frames are personal. They're, you know, what one person's time frame, like if someone comes up to me and says, Brian, are you bullish or bearish? Like, what is that? Give me some context. Give me some context. Long term, yeah, I'm bullish. I mean, the market's gone up since, you know, since its invention. That's all it does. But right now, I'm bullish too. Getting a little bit cautious here because we've had a really nice run. The biotechs are up against a level where they've had some resistance. The financials are close to the highs from about 3 years ago. I think XLF is like 30.08. I just noticed yesterday. It's maybe 29.70. So they're up against a level that a lot of people are going to call a breakout. But where does it come from before that breakout? Do you really want to buy after the rally we've seen? Russell 2000 has had a great rally the last 6 weeks, and it's right up against the level that's been resistance this, you know, for all this year. Now, there's two things. It makes me cautious. It doesn't make me bearish, though. I think that for the Russell, what's most likely to happen, speaking of, you know, IWM, that we kind of consolidate here, suck in some shorts, and then jam them. I think it could really start to outperform because it's been such a laggard.
Now, so thanks for bringing up the current market environment. It's a great take on a number of different things. So overall, cautious, pretty constructive though. Seems like trends have been positive, right?
Yeah, well, I mean, bullish, overall, really. But I'm always cautious because my time.
You've been hurt before.
Yeah, but in particular, my time frame is a swing trader. So ideally. My sweet spot is 3 to 8 days. If I'm wrong, it's a day trade, right? If I'm wrong right away. But ideally, I'm scaling out in pieces, generally in thirds, and I'll do that over, 16 market days is really kind of stretching it. Those trends, those nice intermediate term trends, or what I call intermediate term, don't persist much longer than that.
Got it.
So I'm bullish now, but like I said, like Russell 2000, just a little cautious, stock by stock basis is really the way I like to go.
So I want to get to some single stock, maybe more, stock level data. We talked about top down versus bottom up. I'd love to go there. Just one more thing though on the broad market environment, right? So if you're overall bullish, but a little bit cautious, what would tell you, is there a one chart? I love to ask people what their one chart would be. Is there one chart that you would use that would signal to you that the bull run is over and that things are starting to come down? Is it a particular level on the S&P? Is it a particular breakdown or an indicator? Or is it something else like semiconductors or small caps? Or what would be your one chart to kind of get a read on what to pay attention to, big picture?
Well, so for my time frame, I'm not interested in saying here's the top.
Sure.
I'm not interested in putting all the pieces of the puzzle together and saying, because so many people get that wrong too. And I don't mean that as to hurl insults, but my time frame specific, for me, the number one time frame that I look for in terms of confirmation of what the market trend is the like a 30-minute time frame that goes about 30 days or 15 minutes, and I put a 5-day moving average on there. So if the 5-day moving average is rising.
Right.
And I'm talking on intraday time frames. I don't look at it on a daily. So I cut it, 13 30-minute periods per day. So that would be 13 times 5 is 65. Right. So a 65 period on 30 minutes, 30-minute charts is 5 days.
Got it.
So it's a true 5 days of 5 market days. You're not waiting till the end of the day to drop this fifth. It's more responsive, in other words. So to me, if we're making higher highs and higher lows and the 5-day moving average is rising, I'm bullish. If the 5-day moving average starts to flatten out, I get a little cautious. If we start making, breaking a level of support, and then we have lower highs and lower lows below the declining 5-day moving average, then that tells me be extra careful about the market. But I will also take it on a stock-specific basis. If I'm looking at the market and the market's coming in, I'll say, okay, I've waited for stocks in the past to say, well, I'll wait till the market settles down, and meanwhile that stock takes off without me. So I'll just adjust my position size instead. I'll take a smaller size because what's the word I'm looking for? My confirmation, my conviction rather, is not as strong if we have a market that's undergoing profit taking, or if we have a market in a primary downtrend. I'm much less likely to take longs, and when I do, they're typically maybe a third, a quarter to a third of my normal, risk unit.
Right. Got it. So we're almost out of time, but I'd love to ask you, we talked about bottom-up versus top-down investing, and you tend to think of things from a bottom-up perspective, which from my Fidelity days, that's how we thought about the world. It was all about stocks and then building it up to industries and themes and everything. So we're recording this, second week in November or so. Any areas of the U.S. equity market that you think are potentially emerging as interesting opportunities here, or also on the downside, anything breaking down that you feel like is a time to be wary of what you're seeing?
The semis continue to lead at an unbelievable pace. I mean, they just keep seeming like they're up too much and they're ready to roll over and die, and then they go again.
And then they keep going.
Right? So I become cautious on those, but I don't want to get bullish. Not when we have a bigger backdrop of, rising 10, 20, 50, 100, 200-day moving average. They're all rising. I'm not going to fight those. There's nothing in particular that, IPOs are heating up again. I think that, I honestly don't know the name of it. It's PGNY.
Okay.
This stock came public, I think, at 13, ran to 15, pulled back a little bit, broke above its VWAP, and we bought it at $17.40 earlier this week.
Right.
Just sold some today at $20.40, so $3.
Okay.
And it hit a measured move as well.
Yeah.
So I think the IPOs are going to start to get a little more interesting once again. It's good to see that the institutions aren't buying the garbage and allowing that crap to keep coming at these crazy levels, which I want to talk to you about from a Fidelity perspective off camera.
Off camera, we'll do that. Okay, fair enough.
So again, it's not real. What I tend to do is when I look at a lot of stocks, my process is to look at a lot of stocks on multiple time frames each day.
Okay.
And I start to notice as I write down notes, hey, there's another semiconductor, there's another healthcare, there's another healthcare.
Yep.
So I don't go from the health, like you said, Fidelity would go bottoms up. And I didn't actually realize that. I thought it was a top-down shop. So it's great to hear.
Yep.
You get a head start, I think, on the top-down people. Because you see it bubbling under the surface. And by the time that sector or the ETF starts moving, you're already in one or two of those leaders who are making that move. By the time the whole weighted index catches up and drag the bottom feeders as well, we're already looking at going, well, that's of course.
Obviously. That's great, guys. And it's funny, I always tell our viewers, it's so easy to get the blinders on, think of the big picture, think about stocks, bonds as an asset class, where there's so much message at that bottom level, looking at the stock level. So
if you're managing 100 million, 100 billion, whatever, if you're managing big money like that, you have to go top down.
Of course,
and it sounds so smart when people say all this stuff that no one understands. So I'm, deep down, I'm just a stock picker. And I'm proud of that. It's not just a stock picker.
That's great. Brian, this was a pleasure to sit down with you. Thanks so much for coming on the show. We'd love to have you back on down the road if it works for all of us.
Anytime, of course.
Perfect. Thanks so much, Brian.
Thanks.
Brian Shannon, CMT, president of alphatrends.net, here from the Las Vegas Traders Expo.